Did you know that gold prices have risen by almost 30% over the past year? Gold has long been seen as a safe haven during economic crisis and a hedge against inflation. But can it actually be a tool for building wealth? And more importantly, is 2025 the right time to invest in gold? In this video, we are going to explore these questions by analyzing gold's historical returns, factors that influence gold prices, and how these factors are trending in 2025. When evaluating gold as an investment, understanding its historical returns is key. Here's how it stacks up. Average annual returns for last 25 years in gold, which means starting from year 2000, is 10.3%. Whereas if we look into the S&P 500 index, for this period, it has given around 8% annual returns. Even if we include the dividend income, this adds up to 9.5%, which still does not match the gold returns. Nasdaq 100 in this period has returned around 12%. This is a bit higher than gold, but with higher risk. My intention is not to compare the returns with stocks, but I just want to highlight that gold's performance over the past 25 years is highly competitive. It's not just a wealth preservation tool. It has delivered strong returns and has often outperformed traditional stock indices during periods of uncertainty. For instance, if we look into the period of dot-com crisis, which is 2001 to 2002, S&P 500 has returned in negative, around -11 and -21 percentage points. On the other side, gold returned positively in this period, going as much as 25 percentage points up in 2002. The demand and price of gold are driven by multiple factors, including jewelry fabrication, technology, investments, and central bank activity. Let's try to understand each of these factors more closely. Jewelry is the largest use of gold, making up 48% of total consumption in 2024. Countries like India and China, where gold holds cultural and traditional significance, are the key drivers of demand. Festivals, wedding seasons, and economic growth in these countries typically boost the jewelry demand. Gold's excellent conductivity and resistance to corrosion make it essential for electronics like semiconductors and smartphones, renewable energy, for instance with solar panels, and finally, with the medical devices. Central banks hold gold to stabilize their economies and hedge against currency risks. When central banks buy gold, it boosts confidence in its value and often drives prices up. By investment, I refer to individuals and institutions who invest in gold by either buying directly or indirectly through managed funds, like ETFs. Gold remains a popular choice of investment, especially during inflationary periods, market volatility, and geopolitical crisis. If inflation remains high or unpredictable, gold could perform well as a hedge. Or if central banks start lowering rates, gold may become more attractive. Events like geopolitical tensions, financial crises, or currency devaluation could drive gold demand as well. Let's look at the contributions from each of these segments. As I said earlier, jewelry contributes highest. In 2024, this demand stood at 49% of the overall demand. Central banks contributed second after the jewelry segment, with 23%. Through investments, the demand was around 21%. And at last the technology, which is the smallest contributor. It contributed to just 7% of the overall demand in 2024. Now that we understand the factors affecting gold demand and its price, let's understand what is the outlook for the coming year 2025. We already discussed that India and China generate the most of the demand from jewelry perspective. India's economy is likely to slow down, comparatively, in 2025. As per this report, its last year GDP growth was around 8%, which is expected to come down to around 7%. As per another report, on China, GDP target should remain 5% in 2025, which is around the same growth rate we see this year. US is already talking about tariff increases, which might further pull down the economies of these countries. As the economic outlook for these countries is very similar to the current year, I do not see any increase in demand coming from the jewelry fabrication segment. From investment perspective, American picture is looking better. Elections are done, and the stock market is already showing signs of optimism. Further down the line, inflation is expected to come down. Also, the interest rate cuts are further planned in 2025, which will again push away the investors from gold. But investment decisions are also tied up to demands in other segments. So we will visit this part again later in this video. While technology accounts for a smaller share of gold consumption, advancements in green energy and industrial applications could subtly increase demand. This change is expected to be very minor though. Regarding central banks, many of them, especially in emerging markets, have been increasing their reserves in recent years to reduce reliance on the US dollar. Emerging market central bank purchases of gold have risen notably since the freezing of Russian central bank assets in 2022, following Russia's invasion of Ukraine. And the trend is going to continue. This trend might be a game changer in 2025. 2 out of 4 factors are in favor of higher gold prices in 2025. This includes technology and central banks' purchases. Technology's contribution is very minimal, so it cannot be a major driver. But for the central bank purchases, if you compare the demands of 2022 versus 2021, it's been doubled in this period. There is an interesting report from Goldman Sachs, which talks about the gold outlook for 2025. And this also mentions that central banks in emerging markets are going to ramp up the purchases in gold. Because of this reason, Goldman Sachs has forecasted the gold prices to climb higher. How much? According to this report, the increase in price is expected to go $3,000 per ounce by end 2025, which is close to 12% increase from the current prices. 12% increase is more than the average annual returns in gold, which we discussed earlier. This means, year 2025 is expected to do better for gold. Typically, gold is best used as part of a diversified portfolio, rather than a sole investment. You should consider allocating a small percentage of your portfolio to gold, to balance risk and reward. Please note that this post is for educational purposes only. The information contained in this article does not constitute any recommendations to buy or sell. This brings to the end of this video. Let us know, what do you think about gold as an investment in 2025? Share your thoughts in the comments below. Do not forget to like, subscribe and share the video.